Michael Saylor, Bitcoin is building a base as OG sellers exit and big money preps. Saylor says Bitcoin's volatility is easing as early holders cash out, clearing the way for institutions to step in and build a stronger market base. Bitcoin's recent stretch of muted price action is a sign of strength, not weakness, according to Strategy, MSTR Executive Chairman Michael Saylor. Speaking on an episode of Natalie Brunell's Coin Stories podcast released Friday, Saylor argued that the market is in a consolidation phase as longtime holders sell portions of their stacks and institutions prepare for bigger allocations. If you zoom out and look at the one-year chart, Bitcoin is up 99%, he said. The volatility is coming out of the asset. That's a really good sign. Saylor described the current environment as one where early adopters who bought Bitcoin at single-digit prices are selling modest amounts to fund real-world needs, such as housing or tuition. He likened it to employees of a high-growth startup liquidating stock options, not as a loss of faith but as a natural step toward maturity. That process, he said, is paving the way for corporations and large funds to enter once volatility falls. He dismissed concerns that Bitcoin's lack of cash flows makes it inferior to traditional investments, pointing out that many valuable assets, from land to gold to art, also lack income streams. The perfect money has no cash flows, he said, adding that institutions anchored in decades of equity and bond frameworks have been slow to adapt but will eventually be forced to rethink. A central theme of the conversation was Strategy's effort to re-engineer credit markets using Bitcoin as collateral. Saylor said conventional bonds are yield-starved and under-collateralized, while Bitcoin-backed instruments can be structured to offer higher yields and lower risk. He outlined the firm's suite of preferred stock products, Strike, Strife, Stride, and Stretch, which are designed to provide investors with yields of up to 12% while being heavily over-collateralized with Bitcoin. By doing so, Saylor argued, the company is giving Bitcoin cash flow-like qualities, allowing it to slot into both credit and equity indexes. We're giving Bitcoin cash flow, he said, framing it as a way to broaden institutional adoption and draw more capital into the ecosystem. Saylor also addressed why Strategy has yet to be included in the S&P 500 despite its scale and profitability. He said the firm only became eligible this year following changes in accounting rules and noted that Tesla also waited beyond its first quarter of eligibility. He expects eventual inclusion as the market grows more comfortable with the Bitcoin Treasury model, which he dates to late 2024. Looking ahead, Saylor portrayed the rise of Bitcoin Treasury companies as analogous to the early days of the petrochemical industry, with multiple products, business models, and fortunes emerging in a chaotic but transformative decade. He predicted Bitcoin would continue to appreciate at an average rate near 29% annually over the next 2 decades, fueling new forms of credit and equity instruments. In closing, he struck an optimistic tone about both Bitcoin and society more broadly, saying much of today's online toxicity is amplified by bots and paid campaigns rather than genuine discontent. Bitcoin is a peaceful, fair, and equitable way for us to settle our differences, he said. As everyone embraces it, peace will spread, equity will spread, fairness will spread.